please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Head to New Delhi. The two-day Mind Summit has kick-started, and CNBC TV 18's Prashant Nair is moderating a panel now on whether we're now smarter about our future. So let's hear out.
Newer diseases are coming, but fair enough, we'll find out a solution to that also. In financial market, we have seen central banks coming and rescuing things. Earlier, Bank of Japan used to rescue Japanese companies. Then we saw US Fed rescuing various institutions. And we have now seen European Central Bank rescuing the entire countries. So why are we worried about? The risks will be there, volatility will be there, but I think we have far better institutional framework to manage those risks.
Briefly, do you agree with Obik's point that maybe the world is getting smaller in the sense, I mean, from an India perspective, it's going to be less receptive of what we want to send out as exports? I mean, just defining it more closely.
So let me put it in a different context. We have to maneuver our way. If US and China is fighting on trade war, can we go to US and say that, look, China exports $280 billion of garments to all of you, including yourself. We are exporting only $17 billion. We have allowed your Google to enter into India. China doesn't allow. We have allowed your Uber to enter into India. China forces it to merge with Didi. We have allowed your Amazon to enter into India, and we might allow Walmart to buy Flipkart. China wouldn't allow that. Now, we have been so favorable to you. Why don't you buy $280 billion of garments from me and $17 billion from China? If you can do that, our job is done. We don't care about the world. We can still get the way we want. Similarly, we have $60 billion trade deficit with China. There's no other country on this planet which has this kind of percentage to GDP trade deficit with China. Now, what are we doing about it? This trade deficit is so large. You know, China and Pakistan have become friends. There are many factors, but one of the factors is China-Pakistan Economic Corridor, which is $60 billion investment. Who finances that? You and me. If all of us stop consuming Chinese goods just for 1 year and gave that money to Pakistan, Kashmir problem will be solved. So can you maneuver things in this volatile world to your benefit? We have to be selfish and we have to protect our interest first. So far, we have been believing in Atithi Devo Bhava. We haven't maneuvered world to our interest.
You were also recommending more inward looking in the sense. I mean, take care of your interest.
Look outside, but
yeah,
protect your interest. There's no harm in being selfish.
Sure. Pawan, come in on some of the points.
Well, generally, I would agree with that, which is, if the big boys are getting into a fight, I mean, look, our economy is mostly a domestic economy. Our net imports, while matter to some extent, they're not answer moving. So keep your head down, focus on your interests. And on balance, I think we're a very open economy. I mean, yes, there's a trade deficit with the US, but it's $20 billion, right? I don't think Trump is, other than a few of the headlines on outsourcing of jobs, et cetera, I don't think he's losing sleep over our trade deficit, if you will. But I think with China, we do have an issue. And, we have $72 billion of electronic imports. How are we going to solve that structurally? I mean, technology is going to be a big part of what all of us consumes and the cell phones that we have. And we need a strategy to solve those types of issues rather than really, focus on trade wars. I think going back to your earlier question on riskier place, often embedded in that question is this view of economic cycles, right? Are we headed for another downturn of some sort? And I would tell you at least our view, and if you just look at the US as being one of the big drivers of the global economy, you're now 9 years into an expansionary phase, right? So we can all debate whether a downturn's coming next year or the year after or the extent of the downturn. But at least our view is that we're closer to something, to a hiccup at a minimum than we were a few years ago. And just business cycles historically will teach you, and I don't think we probably subscribe, or I personally don't subscribe to the view of now it's all secular growth forever because technology has changed the world. So I think
and you're not talking about financial markets. You're talking about the economic cycle having run
the underlying, yes,
for 8 or 9 years.
And then look, financial markets aren't obviously financial markets move much more quickly. And so you can have political events that will drive dramatic outcomes in financial markets that may not impact the underlying economy. But I'm saying if you just looked at, GDP growth of economies and what kind of is happening to global growth, I think you are probably in a riskier phase than you were a few years ago. I also think you have a lot more political risk. I mean, you've got strong individuals like, leaders, Trump obviously being the one who's most talked about, the trade wars, et cetera, which I think can drive more risk both for financial markets and economy. But I also do agree, these are all things that, the world has taken in stride. I mean, you could have looked back 5 years and pointed to many of the same risks, and I think no one would have said the next 5 years would have looked like the way they did for the global economy. But I do think if you go out to the medium term, one of the things the election of Trump, Brexit, and this notion has gotten a lot of press, is this disenfranchisement of people, driven in large part by the changes technology is going to drive in the labor markets.